Happy Friday. Welcome to the morning show here on Stock Market TV. I am Spencer Israel, joined by Steve Strazza this morning and chart wizard Alfonso, as always, in the background. Big day for us here on the morning show. We've got Meb Faber joining us, Cambria Investments, host of the Meb Faber Show, which is a tremendous investing podcast. If you have not checked that out, he'll join us in about 20 minutes or so. In the meantime, we got the charts. We actually have a couple earnings to discuss. Very interesting that we have. Actually, we have one to discuss now, and then there's going to be another one in like a half hour because they're going to report during our show. So that'll be fun. What else is on my radar? We got charts. Oh, we may have a mystery chart. Well, let's see. Kimmy, Sokoloff, Ian Colley, they'll be on as well. You know what to do. Smash the like. Let's roll. It's the morning show. Good morning, chat. How we doing this morning? Good? Good. Excellent. Yo.
Hello.
What's up?
Slow start this morning, huh? 3 minutes late?
I've been here. Where you been? I've been at my desk for like an hour or more.
I was reading Global Asset Allocation by Meb Faber. I lost track of time.
Okay. Fair excuse.
Excited for the interview.
We will let that slide for now. What's on your mind this morning? You got stuff?
These tops, man, are they reversing? What do you think?
Should we look at a few?
You want to jump right into it?
Yeah, let's look at a few tops. I know we kind of meant to do this yesterday. I don't know if we actually got around to it.
Futures are up nicely. 50 basis points here in the S&P. A little bit of follow through here this morning on yesterday's turnaround. And really, that long-legged or I guess wide-range doji. If you're looking at the S&P futures from 2 days ago.
I love me a good doji.
I don't know if we have a chart of the futures, do we, Fonz?
Probably not.
Zoom in on these last couple candles. She just showed on TradingView. We don't do enough live charting on here.
I tried to bring up my live charts once and got shamed out of the building, so I won't do that again.
I said we should do live charting, not you should do live charting.
All right, let's do some state of the markets, and then we'll have Meb in a couple of minutes. It'll be fun.
Let's go.
All right, what do we got here?
Throw up these tops. Throw up the S&P. Big level here at the August highs from last year. Now, we undercut it a little bit, and it also corresponds with the pivot lows here from this August. Do we scoop and score? That's what we're looking for, right? We have this well-defined level here. We're looking at SPY, call it 430, 431. Trading around 430.96 in the pre-market. This is a critical level. If we can close back above there here today, going into the end of the week, I think that's big repair work, and that's probably a tradable low for the broader market. The NASDAQ, do we have a NASDAQ chart? If you throw up the Qs, we could use the one from yesterday. Mary loves the classic not a top pattern. It's because they're some of the best patterns. Again,
why?
Do I keep talking about Frank Capillari? It's the same point that he was making in his presentation, right? Where he says, be cognizant of if it's a bullish pattern in a bull market or a bearish pattern in a bull market, right? Because patterns and these consolidations are likely to resolve in the direction of the underlying trend. That's all that means. When you're looking at a reversal pattern, which is what a top is, right? In the context of a bull market, you see this primary uptrend here drawn with the blue line, they're just less likely to complete because trend reversals are more rare than trends persisting, right? So if this were to fail and rip right back above 355, which it's pretty much doing, that would be just ordinary market behavior, right?
Yeah, I suppose. I guess I haven't ever really paid attention before to the bearish within the bearish pattern within the longer bull trend. So this is relatively new to me. So I'm learning. So I'll take your word for it.
NASDAQ here trading at about 361 and change in the pre-market. Tech XLK looks similar. And again, I just want to mention those micro caps, right?
Why?
What do you mean why?
It hurts to look at.
It does, because it's that bad. But if we're going lower, right, and if this correction is not over yet, is this going to break down? That's going to be your signal, right?
Oh.
These are going to lead to the downside because they're the worst stocks. The weakest index, rather. Okay. Microcaps for now digging in at this key psychological $100 level.
Oh my God, that's huge.
Yeah, rebounding here again today. So I think that's an important one to watch right now too. And then I just want to talk about breadth really quickly. Did you pay attention at all, or were you too busy during our breadth panel Tuesday?
No. No. At that point, I still had all my wits about me.
So what do you think? What was the biggest takeaway from what Hurley and Thrasher were saying to us? Because they had a similar message.
What was the biggest takeaway? You're gonna have to answer that one for me. I don't know if mine will be the same as yours.
They were both, indicating that this is a weaker rally or a weaker bull market than what we've seen past few cycles.
The degrees of bulls. Thrasher had that. I think it was Thrasher that had that one slide, and maybe it's Hurley. The one slide showing the degrees of bull markets, right? Yep. And the one that we're in right now was a much lower high than the prior ones.
That's right. Do we have any of the Thrasher and Hurley charts or my AD line chart?
I actually
or the
do.
Percentage above the 200-day chart.
I actually do have them. If you give me like 10 seconds to pull them up. I don't know if I have the one that I'm thinking of in my head, but let's see if I do.
Shout out former rock star Jason Krutsky of TrendSpider in the chat this morning.
Heyo. That's what we learned yesterday.
Yeah.
All right. Give me a minute to find.
All right. So this one's good, right? This was confirmation from Market Internals of the new lows in the S&P recently. So I want to see these charts hook higher. Right, if we reclaim these pivot lows here, it's key 430 level. It's really the percentage of stocks above 200-day that shows the weak rally. That's the one I want, with the green and red upper and lower bounds.
I can't find the slide that I'm thinking of in my head, but you know what I'm talking about. It was the one, yeah, a bull market, albeit a weaker bull market.
As I look through just some of these industry and sector indexes, whether it's home builders, tech, they're all set up really nicely to kind of really hook higher here. Nice little failed moves, right? A lot of these failed tops just looking like quick little shakeout lows before maybe a swift move higher.
Well, I'm obligated to mention that today is the last trading day of the month. So
great. What's your point? What do you mean you're obligated to mention?
I don't know. The calendar's turning.
Am I supposed to not look for long trades because the market's
No. I'm making an observation that it would be awfully coincidental for the market to turn the page to October and the market turns around again as we come out of the worst month of the year. I don't think it's that easy. Obviously, it's not that simple. But for those that follow such things, October is on Sunday. So
the only thing that makes me care about the end of the month is that we get new completed candlesticks.
Right.
All right, so I guess we don't have my chart. That's okay. I'm not in that chart book. I'm not going to make it right
now. Here. I have the chart book open, but there's 78 slides in here.
And they're in the top of the deck.
Repeat the one that you wanted again, because I have it here.
Percentage of stocks above the 200-day moving average. Why isn't he driving?
Do I have it? Well, I have no, I don't have that one because I have the highlights deck from the summit. I don't know if it's in there though. I don't think it
I
is.
had so many slide decks open on my computer yesterday that while I was doing chart requests live, the data would barely load when I was punching in new tickers. My computer was about to blow up yesterday.
Yeah. Hey, speaking of, I just noticed a new thing in Chrome where if you're like me, if you're like a serial tab opener and you have 100 tabs open at one time,
Yeah.
in Chrome, if you mouse over the tab, it'll tell you how much RAM it's using, which is cool. So you can close out. I didn't know that. I noticed that like a half hour ago.
Even I knew that.
I didn't know that.
Yeah.
So, because I have I don't know, I have 5 windows and maybe 70 tabs open right now. It's a lot. It's hard.
All right, can we talk about some news here today?
Oh, can we talk about some news? We got some news. You want to do some earnings real fast? We got a good one yesterday.
Yeah, sure.
All
Let's
right.
do it. Yeah.
Nike. We got Nike last night, and
yeah,
you're right. Yeah, yes, we did. It was a largely good quarter for them. It's funny, we talk about Wall Street picking and choosing about the things that it cares about. Wall Street cares about direct to consumer and cares about China. Doesn't really care about any other part of that report, right? So the revenue came in light for the first time in exactly 2 years, but their EPS beat. Sales in Greater China, rose, but came in a little bit light, but they still rose. And then their direct to consumer rose as well. Although revenue in every other segment of the world, North America, Europe, South America, they all fell. Wall Street doesn't care about that, though. There was also a lot of positive commentary on the call regarding guidance. So the stock is up, what, 8? Is it up 8% this morning? What is it up now?
And I mean, that's a big move for Nike. I mean, this stock doesn't move 10%, very often.
So yeah, up 10%
so
now. Yeah.
So, but I don't understand. Everything you're saying, nothing sounds that bullish. So sales fell everywhere. China was okay.
Yeah, China was okay, and direct to consumer was good again, and it continued. Their DTC business was up double digits year over year. So increasing order size. So
I don't know how else you get Nike than direct to consumer. Like, do people really go to Nike stores?
No, they go to Dick's Sporting Goods. They go to any retailer, Macy's. I don't know.
Really? You don't just go. I just go on Nike.com. That's how I do it.
They love you. Then Nike loves you.
No, I did. I got a pair of Nikes in TJ Maxx.
There you go. Then now they hate you again. Right. Yeah,
you're right.
I know. So yeah, you're right. I don't know if you see Nike make moves like this too often on earnings reports.
No, I can tell you actually, the last time it made a move in excess of 10% was December of 2022.
Wow,
about 12%, and then before that, you'd have to go back to June of 2021 for another double-digit move, and then March of 2020. So it looks like once a year they get this about once a year. So big day for Nike. But look, the trend is still lower here. I don't like this chart. It's zoomed out a little bit too much for my liking. This thing looked like it was ready to roll over. Still not above like any key VWAPs. If you zoom in, I think maybe these pivot highs, these year-to-date pivot highs around 130, but we're a long way away from there still. Then you'll start to have a base kind of shaping up here.
Do we have any sympathy this morning? Let's look around. Under Armour, yeah, a little teensy bit. It's funny that Dick's Sporting Goods is trading higher on this as well, when the whole point of this is the direct to consumer and not the part of it that includes sporting goods stores. But anyway, you are seeing some sympathy moves with Nike. I mean, heck, even Foot Locker is up this morning. And granted, all stocks are up this morning, so it's not it's not saying a whole lot. But
Dick's is up 3%.
Yeah, and Foot Locker is up too. So good luck with that, I guess. Okay, we have another takeover here this morning. I want to talk about,
I didn't see it.
and there is an earnings report, but it's from Carnival, and they always report at like 9:15 or like 9:30, so the numbers aren't even out yet. So here's a chart if you want to look at it. I don't know if you do, because there's about to be a number in a half hour. So
Wait, earnings are not out yet? It's 8:45.
They're never out. They always report like either right before or right after the open. It's so bizarre. I don't know
Are you
why.
sure?
Yes, I'm sure.
No.
Yes. I don't know why, but that's how they do it over there. They're based in Europe anyway. Let's look at this. Do we have a Blue Apron chart? I don't know if we do. We may not. If we don't, that's okay. Blue Apron is getting taken over, everyone.
Hold on. I don't hate the Carnival chart.
I mean,
I don't hate that.
Why not?
What do you mean, why not? Reversal pattern completed. You got a massive leg higher. If you measure out the uptrend just off of last year's lows in Carnival, we've retraced about 38%. Pretty textbook pullback after such a run higher. The stock quadrupled, right? I think you got it right here, 1450, 38%.
I guess. Oh wait, my bad. I was looking at Royal Caribbean. That's why.
Right. Who would buy Blue Apron?
Is it the CEO of Walmart or one of the some Walmart executive? Here I have his name. I got the whole thing written down. Mark Lowry. He's a big deal. Wonder Group is his company. He's a former Walmart executive. So check this out. So Blue Apron IPOs in 2017 in June 2017 at a $1.89 billion valuation.
Mm-hmm.
They get taken over this morning at a $103 million valuation. So that's good for a 94% drop.
It got that bad for them, huh?
It got that bad for them. Although a healthy premium he's paying. He's paying $13 a share, which
Spencer, this was a $35 million stock this morning before this deal.
Right. So that's what I was going to say. So he's paying $13 a share. Hasn't been there since February. So he's paying a healthy premium for it this morning.
So Blue Apron does the prepared meals? Yeah.
Yep,
Okay. Meal kit services. Okay. So let's just put this in perspective. Blue Apron, a lot of people know the name, right? It was a popular brand, I think, for a while.
Yeah.
I've heard of it. $35 million market cap. A few weeks ago, Hostess Brands sells Twinkies and other packaged goods that you've been buying at 7-Eleven for the past 100 years, probably. They sold for what, $5 billion?
I know. That's a lot of Twinkies.
I don't know.
Anyway, 94% drop from IPO to takeover in 6.5 years. So great. And then there was a couple reverse splits in there as well. So you're absolutely right. Whoever said it, Jerry Edwards, zombie stock, but now it's gone, so we can all move on with our lives. Should we bring on today's guest? He's here.
Yeah, let's do it.
Yeah, all right. Meb Faber, founder of Cambria Funds, founder of the Idea Farm, and also a host of the Meb Faber Show, one of my favorite financial podcasts. Let's bring him on right now, and let's see what's on his mind.
Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Hey, Meb.
What's up? Good morning.
Thanks for joining us.
Absolutely. Nice.
I know it's early for you, so we appreciate that.
It's real early, but great to be here.
You are out in Colorado, right?
California, so you should feel even worse about getting me out of bed this early.
All right.
Okay.
Well, we love having you here, Meb. You were a huge influence for me early in my career. I've read so much of your stuff. JC was like, let's reschedule the interview. I'm not going to be here. I said, no, it's fine. It's fine. We got this. So I've been looking forward.
We don't need JC. He'll just talk the whole time. So this will give us all more chance to breathe and say what's on our mind.
So I want to start with your background, because I know you have like a quasi CMT thing going on there. I think you did a couple. Explain to us what happened there, because I have a similar situation myself.
Goodness, man. Well, reformed engineer, I guess. I graduated at the peak of my favorite bubble, although the last couple of years was weird enough to maybe challenge for that crown. But internet bubble in 2000 was really a unique and special time. Many that didn't experience it don't realize it was also a biotech stock bubble and other things too. But biotech, the big news back then was they were sequencing the genome. And there was a big race between the government and a private company helmed by Craig Venter. Anyway, I was a biotech engineering student and I graduated right at the peak. So 2000, spring of 2000. My whole intent as a young person was to go finish grad school, go get a PhD. However, all of my friends in the late 90s had every year above me at school started moving out to San Francisco, joining the internet boom. And I'd go visit and say, man, this is just the land of milk and honey. There's free champagne flowing everywhere. You go to the office and everyone's playing foosball and video games, and there's free snacks, not to mention your stock goes up 2.5 every day. I don't know. I don't remember if they're still quoting in quarters and halves at that point, but I'd like to think they were. Anyway, I studied. I went to work for a biotech mutual fund while going to grad school, and after a year of that biotech mutual fund imploding, the path kept sort of diverging. Interest became my career more and more. I moved out to San Francisco to join my friends there and spent a little time in Lake Tahoe too, which was pretty great.
Nice.
Working for, it got more and more quantitative. So I was working for a startup commodity trading advisor. And after a handful of years of that going under, moved here to Los Angeles to start Cambria, which was at the time, the intent was just to be, this would have been 2006.
Meb, did you just say you went from a biotech analyst to a commodity trading firm?
Yeah, I mean they traded everything, but I think the way to describe it would be, I mean, you could say it's a multi-strat fund.
Yeah,
but it was formed with a lot of people from that sort of commodity trading background.
Got it.
But they traded everything.
Is that where you started with a little technical analysis interest or no?
Yeah, I mean, and the reference there especially is, I was trying to soak up everything, and I was definitely very curious with a lot of that world and spent a lot of time reading all the Edwards and McGee, if I even got the name right, all the books that were in the curriculum. And the defining moment, we've told the story before, so apologies if you've heard it, but was they do a 3-level program like the CFA.
Yep.
And they used to have, it's changed over the years, but they used to have ability to write a paper instead of taking the test for year 3. And the last thing I want to do, like any other student, was take the test. And so they announced they're doing away with the paper January 1st, whatever year it was. And so I threw in an abstract the last second, and then never intended to write any academic papers. My God, it's crazy to look back at this like random decision at the time, and had anyway wrote my first academic paper from that CMT prompt.
What was it on?
It was called, it's funny because the original name was called the case for market timing, something with market timing in the title. Right. Yep. And not a single person would read it. They saw the emotional baggage of market timing. It was just like, this can't be done. This is an embarrassment. Don't want to read it. So I changed it to a quantitative approach to tactical asset allocation. Mouthful, right? That paper.
Yeah, I liked the first title, but okay.
The paper came out right before the global financial crisis. So obviously it became very popular, as if I had a crystal ball that predicted financial crisis. But that started a career of blogging, books, writing, none of which I really had intended to do at the time. But all started with not wanting to take a test.
God, so you could thank the CMT for that, I guess, because you've written a lot since.
And then there was a lot. Yeah, I know. It's like thousands of blog posts. We've probably written, I don't know, 15, 20 white papers, 5 books, 500 podcasts, countless Twitter trolls. But that was my one and only academic paper. Having gone through the academic paper process, I sent it to a lot of luminaries in the field at that time.
Right.
People I really respected. I was in my 20s.
Mm-hmm.
And the responses I got, I mean, most were just like, go away. I don't want to read this.
Right.
But a handful were really nasty. And I love to keep receipts. So I've saved them. But there was a handful that were like incredibly thoughtful from people that had no business responding that, managed $200 billion today. I remember that. And fast forward 15 years now, try to pass that along when I get those emails now, or the DMs that you'd be like, oh God, but try to have a little consideration. Anyway, here we are.
Wow. Yeah, it's the right thing to do. So I want to go right into what we have you here before Spencer cuts this thing off on us.
I'm not going to cut it off.
All right. You've done a lot of work on valuations and all these different international equity markets. I was talking about what's cheap, what's expensive out there. So what has your interest right now?
Yeah. So let me tie this in because, we now manage an ETF firm and the whole foundation of that, and much of which goes to what we talked about in the beginning, is trying to find out quantitative rules-based ideas that work over time. And the two foundational pillars, one is very much a Charles Dow, 100 plus years ago,
right?
Trend following concept, right? Like that was what the paper was about. And on the other side is value. And, most people think those are two concepts that don't necessarily line up, but often they do. And my ideal investment is one that has characteristics of both. So something that's cheap in an uptrend, if you add in the sentiment of being hated, that's even the cherry on top. So, but putting those into rules-based situations.
I think so. It's an important point. Basically, what Meb is saying is that he incorporates both technical and fundamental analysis in the approach to your funds, correct? There's literally a following component that you overlay on top of whatever the valuation or quantitative strategy is.
And one of the things you guys do that I like is looking at multiple time frames. I think for us and many investors, the majority of the funds that we manage, so we have 12 ETFs. We got I think 150,000 investors now.
Can you pick a favorite? Can you have a favorite?
We've got $2 billion in assets. Well, like most parents, there's a certain fondness for the oldest. And we have our oldest fund actually just hit a 10-year track record this spring. It's a U.S. stock long-only fund, but it does incorporate both value and a sprinkling of quantitative momentum as well. So it's called shareholder yield, SYLD.
SYLD, yep.
But while we're on that topic real quick, I would be remiss to say, we think it's one of the best times in history to do value-based, to make the value trade both within the U.S. and foreign. And for those who don't use fundamentals at all, it's fine, but they can be additive and at least can be an interesting screen to what to think about. Where everyone, like the U.S. stock market is. Did you guys get any of the charts I sent over?
Oh yeah,
talk about them.
I've got a couple here.
There's two that I think are interesting. We talked about this on Twitter, where we tend to look at things on a very long-term perspective. And everyone knows for the past 15 years, U.S. stocks have just been romping and rolling, right? Compounding at, 12% a year. Yeah. So here's the chart. This is a rolling 10-year U.S. stock return chart. What this means is looking back over the last 10 years, what did stocks compound at? And so you can see this chart, there's been some peaks and valleys. There's 4 kind of large mountaintops. The first being the 1920s, roaring 20s, right? Yep. The second being the nifty 50s. It's funny, they all have a name in retrospect, right? The internet bubble, which was my favorite, late 90s.
Yep.
And then this recent period, and these are all times where the S&P had compounded 15% for a decade. And this recent period really culminating in what was that, February 2021. We have a Twitter thread called What in Tarnation that is, I think, a nice history of how weird that time frame was. Anyway, and then there's a second one, which you may or may not have, but this is sort of its cousin, which is, you could look at this as Sharpe ratio. Same difference, but people say risk-adjusted return, Meb, not just compound return. You can't compare, but it's the same thing. So if you find a hedge fund manager who has a Sharpe ratio of 1, that person probably manages $1 billion. And so everyone gravitates towards over time Sharpe ratio, which is just risk-adjusted return. For most asset classes are usually around 0.2, 0.3. Yep. But same thing said differently. All I'm trying to say in this is that, and you can also look at the various periods where the 10-year compound return was 0 or the Sharpe ratio was 0 or negative, right? So after the 1920s, what happened? Great Depression. After the nifty 50s, 60s, what happened? 70s. Inflationary 70s. After the internet bubble, you had the bust. What's going to come after COVID meme stock mania? I don't know. But the setup is that broad market cap stocks are expensive. Now, it's not as crazy as it was in 99. It's not as crazy as it was in Japan in the 80s, but on average, they're expensive. Mm-hmm. But the good news is, sorry, I'm long-winded here. The good news is that, and this is something y'all do, that's not your only choice. You don't have to wake up and only talk about the S&P 500. There's plenty of other opportunities. Right. The first being value stocks in the US, the second being foreign and emerging. So your initial question, which is what do you like? Anything that falls under that banner, and we can get into that more.
And is it the same trade though, right? Because what you're saying is you like value over growth and you like international over US. I think so many of these factors or relationships, right, whether it's small cap versus large cap, US versus world, equal weight versus market cap weight, it's really a growth versus value thing. So is that why you like international stocks more, because there's more value and less growth out there?
There's always overlap on the Venn diagram. So if you look, for example, somebody will be talking about, look at the opportunity in small cap versus large cap valuations, one of the best opportunities since the late 90s. Mm-hmm. And that is the overlap. And then they'll talk about sectors. Well, they'll say, well, no, Meb, it's just a sector story. It's financials, energy, materials, industrials versus tech, whatever it may be. And there's always overlap. And it's the foreign argument is, I think, a great one. We did an old blog post called The Case for Global Investing, which really outlines that. But foreign stocks have been largely, I think, swept away to the dustbin of most investors. There's in emerging, there's like not even any interest or disdain, as people just like don't even care, I think. But over time, foreign stocks versus the US have been a coin flip on which does better in any given year. And this period has been unique since GFC.
It's been over 10 years in favor of US. That's got to change sometime. And when these trends persist, they tend to last, more than just a year. They'll trend for a while. So what in particular outside the US?
Yeah. So within the US, shareholder yield, which we talk about is buybacks and dividends, low valuations. We're talking single digit PEs.
Yeah.
That puts you into certain sectors. But what's interesting is if you look at our foreign and emerging funds, we have like a 5% tech weighting in the US. The emerging fund, that's the number one sector on valuation. But as far as combinations of the two, we can talk about a few countries. Let's give you the valuations. We'll see if any of these are uptrends. I probably think they're probably not. You mentioned the Idea Farm, which is a free email we send out every Sunday, and this sends out quarterly valuation updates of every country in the world. But it's kind of a fun email. Number one is a country, and by the way, let me impart that the cheapest countries by definition are almost always hated, and they're cheap because of the PE ratio. It's not the E usually; it's because the P went down like 80%.
Right.
Greece,
Russia.
Wait, let's see if you guys can guess any of the top 5 cheapest stock markets in the world. I'll give you a a Cambria bumper sticker, Cambria shirt, Cambria something. What? Can you guess top 5?
So we're including emerging, right?
Developed and emerging, no frontier.
Top 5 cheapest
Argentina.
markets. I was going to say South America, just all of it.
Okay, that's not a
What's
country.
emerging from South America?
Just all
It
of it.
can be developed too. There's plenty of developed.
Greece.
All right, wait. So slow down. You got to do one at a time.
Okay, all right.
Brazil is in the top 5.
Okay.
How about Portugal or Greece or Ireland?
Brazil is 5th. So a lot of the former pigs, what they used to call them, have sort of bubbled up a little bit. The valuations are starting to slowly rise. So Portugal, Greece. Where is Greece?
Nigeria. I don't know.
So I think Nigeria is not quite yet in the developed or emerging. I think it's frontier.
Okay.
I mean, Greece, by the way, is, depending on the day of the week, is either in developed or emerging. All right, I'll just tell you guys. All right, so Colombia was number 1.
Wow.
Colombia is interesting, and I tell this story a lot because I gave a talk in Bogota in like 2014, and just talking about sentiment. And we use one of the metrics we use, the long-term 10-year PE ratio. It's called the CAPE ratio.
Yep.
And on average, it's around 18. It was at, I think, in the 40s at the time, which for perspective, the US hit 45 and 99, but it's been as low as 5. On average, they're around 18. And in mellow inflationary times, it's around 22. There you go. On average, in mellow inflationary times, it's 22. Right now, it's around 31, 32. So high, but not crazy. We got a lot of good guesses in the comments, by the way. But Colombia, I gave a talk and I said, your stock market's expensive. I love this country. You're wonderful, but your stock market's expensive. And man, the vitriol and hate I got in the session, and people after said, Meb, you don't understand. We put this much to pension funds each month. They buy the stock market. Oil's at 120, yada, yada. And now it's at P ratios at 8. Because the stock market's gone down. And so I want them to invite me back and say, finally, here, the stock market's cheap. Number 2 is Poland. 3, Latin America. There you go. Chile. Then Czech Republic. So a lot of Eastern and emerging Europe has been on this for a little while. Brazil, Austria. Egypt doesn't really count. It's too small in my mind. Singapore, Hungary, Hong Kong, Spain.
Singapore is not cheap, though?
Yeah. And then Malaysia, China. And then, by the way, UK is kind of still on the edge of this bottom quartile.
Yeah.
At the bottom of the BRICS mess, Rob Arnott, who is a wonderful quant and technical researcher, said this was his trade of the decade, buying UK stocks, which is something that I think people... UK for, I don't know, 100 years has had pretty similar valuations and returns as the US stock market. And its valuation is still less than half of the US. Most things are less than half the US, but here we are.
When it comes to like the cheapest countries, why are they the cheapest? Is it country specific? In other words, whatever sector it is, it's going to be cheaper in that country because of whatever geopolitical things that go on there? Or is it these countries all have heavy natural resource or commodity exposure, and they're all valued the same for that reason?
I like this Colombia chart, by the way, because one of the things you like to see on the sentiment is that people have just given up. And Colombia, I think the other Colombia ETF closed. I think this might be the only choice at this point.
Yes, this is the only one. And there's other...
Which is what happens when people there's like the coal ETF closing when
we
at the
talked
bottom
about
of
that.
We love talking about that.
Well, you guys, we were going to launch Jan, who runs Van Eck, is one of my friends, and I as a slight troll / seriousness, I said, Jan, why didn't you call me when you're closing this? We would have taken it over. And so I reserved the same ticker symbol. I said, I'm just going to launch it again.
What, KOL?
Yeah.
Really?
But there's a filing last week for someone doing it.
Yes,
coal
I saw
ETF.
that. Coal
But anyway,
and nuclear one too. We need more.
Yeah.
They always get delisted when we need them most.
So we used to give a presentation. We were talking about valuations. It's funny, on this technical podcast, I'm now spending half of it talking about valuations. But
I love it. We can do this when JC's not here. See?
That's right. That's right.
But as Ralph Acampora used to say, one of my favorite people, he's like, look, we were talking about P, he's talking to the audience. He said, look, what is the numerator in this? He's like, it's P, it's price. It's like price to earnings. He's like, all these fundamental people, half of the variable is technical. Yep. So if you look at, for example, side by side, the cheapest countries in the world and the most expensive, and we used to title it not cheapest and most expensive. We would title the cheapest career risk, and said, look, the reason that these countries, sectors, whatever, usually are cheap is usually for a good reason, right? They're down there because they've declined 40, 60, 80, 90%, because something geopolitical is terrible, something is awful in the economy, something is, their resource, like you mentioned, resource, whatever it may be. And the expensive is usually hitting all-time highs, which, by the way, we wrote a paper in the pandemic, which I guarantee you guys didn't read because no one else read it, but it's a fun paper because it's called, Is Investing at All-Time Highs a Good Idea? No, it's a great idea. Nice. So listeners, this is a really fun paper about what if you just bought things when they hit all-time highs. It's actually a great idea. Anyway,
I have to check this out. I did not read this, but I'm interested.
Yeah, so it's on if you just go to mebfaber.com or cambriainvestments.com, and all my papers and books are free because I got into a fight with Bezos. So the cheap stuff is usually career risk, right? So if you get off this stream and be like, all right, I heard this guy, he was a little sleepy, but he says we got to go buy Colombia, Poland, Chile.
Yeah, I don't think it's what you're saying. Is that what?
But if they took that as the takeaway, and you're a financial advisor and those countries do well, pat on the back, that's your job. If they do poorly as a fiduciary, they're like, what were you thinking? You're buying Czech Republic.
Yeah, nobody else.
You're buying these countries. I just want to be in Nvidia and Microsoft and SPY. Like,
can
what
you
are you
blame
doing? Them? And so the situation, I think, is that describes the value premium. Usually it's a hated sort of category, and but over time, the high quality, good cash flowing businesses, and cheap is not enough, by the way, I think have a lot of potential. And for you guys, if I active trader, you lay over on something just like a moving average or a breakout, my goodness, and that's when it gets really exciting.
Yeah, and some of these international equity indexes started to shape up, since late last year, early this year, but the weakness the past couple months and quarters hasn't been great. How about Vietnam? Do you count them? I know they're frontier, but there's exciting stuff going on over there.
I mean, I would love to launch a frontier fund. There's only one out there. One of the problems with being an ETF manager that you saw with, particularly when you get into the more illiquid or concentrated stuff.
Market access is a problem, right?
Well, access, but also this became a problem with Cathie Wood's funds, is that you can't really close these funds. I mean, you can, but you're not really supposed to. So if you have something like a Vietnam or even a frontier fund, and all of a sudden you raise $10 billion, the flows change the actual composition of the investments, and it becomes a problem. So we try to wade in very, very deep pools.
Meb, I have just a question, because you've got how many ETFs you got? Like 12?
12.
Yep. At what point do you decide to close a fund? Like, how do you make that decision?
We've actually never closed a fund, and I imagine we will. We have sort of merged one fund. There's two types of companies on Wall Street, I think. There's the average mutual fund manager has $0 invested in their own fund. And let that sink in. Like, they go on CNBC, they go places, they say, you need to buy my fund. And you should always ask them, like, do you invest in your fund? Like, the average would say no, which is crazy to me. I put all my money, public money, into our funds. I do a lot of private investing, by the way. I'm an investor in Restream, so I'm glad to see you guys using this.
Hey, look at that.
I hope it works.
Farmland, too. You got a little farmland in your portfolio.
Farmland. But on the public stuff, I invest in my own funds. Our goal is to only launch funds that don't exist, or if they do exist, we think we could do much better or much cheaper. And 10,000 funds out there, they're like, Meb, how many funds there don't exist? Well, there's a lot of ideas. So we'll probably settle in that 15 to 20. But let me give you an example. on the flip side, there's a ton of the big three, and they throw as much against the wall to see what sticks.
Yeah.
And they're kind of soulless, in my opinion. I mean, I love Vanguard. I love some of these shops, but
Was it BlackRock, JP Morgan, and Vanguard?
they just launch whatever they think you'll
State
buy.
Street.
Okay. They don't care. They're not putting their own money into it. They don't care about the actual strategy. So they chase whatever's hot. So it's probably AI now, disruption a year or two ago. Who knows? So we try to only launch funds we want to put our own money into. But on occasion, because they're often concentrated, weird, and different, they are often things that people may not want. And here's an example. We launched a fund and we got into it with the SEC because we said, look, historically speaking, this is when, remember you guys, negative interest rates a few years ago?
Yeah.
Sovereigns around the world having negative interest rates. That was insane.
Yeah, Germany.
We did a study that also no one read that was about doing global, the largest asset class in the world is foreign bonds. There are zero investors in the US that invest in foreign bonds.
Yeah. Great point.
And for good reason for a long time, because the sovereigns were zero and negative. And we said, historically speaking, it's weird the way they do the bond indices because it's based on amount of debt outstanding. And you're like, that's a curious way to invest. And so if you invested rather based on yield, which is carry, historically it beats that by a couple percentage points per year, which is an enormous amount in the bond world. So we launched a fund that was supposed to be titled the Sovereign High Yield Bond ETF.
Yeah.
And the SEC says, no, you cannot name it that. And we said, why? We said they said, because these bonds you hold in your portfolio are not junk companies. And we said, we know it's not called the junk ETF. It's called the high yield ETF. And they say, no, high yield means junk. And we said, no, it absolutely does not mean junk. Junk means junk. High yield means high yield.
Interesting.
And we were like 300 million at the time, I think. And my lawyers were like, Meb, why are you fighting? Don't pick this fight with the SEC.
All right.
Just name. Anyway,
we love to talk to you all morning, but
all right.
But we got to run. We've kept you for 20 minutes. I know it's early, so thank you for coming on, guys. Check out Meb's site, his Twitter, his
Real
blog,
quick.
all that's in the description.
Yeah, Meb, thanks so much for coming on. This was great. We went an extra 5 minutes. Spencer was nice to us. Larry Thompson in the chat just mentioned he's studying for the CMT right now. Meb's paper is actually the 3rd level exam reading material now. So look at that. Full circle.
Don't fail it.
All right. Thanks so much,
Thanks
Meb.
a lot, Meb.
See you guys. Bye.
All right. Always give credit to people coming on it when it's 5 in the morning for them. I know it's not easy. Okay, we went long, and Kimmy's been waiting, and I'm sorry, Kimmy. Let's get you on. She had another busy day yesterday. We'll talk to her quickly before she heads to her trading room and see what's on her mind today. Oh, sorry about that, Kimmy.
That's all right. That's all right.
You had how many trades? 1, 2, 3, 4, 5. 5 trades and another few call outs yesterday, right? 6 trades and then 3 call outs, right?
Yeah.
Okay.
I called out like Airbnb shop. I actually did put on Airbnb. I just threw it on. I was like, okay, it was late in the day, so I just put it on to see if it would go. I think one gentleman in the room did take the trade. So I just put it in there because I wound up taking it for myself after.
5 for 6 yesterday, right? Is that right?
Yeah, I try to do a counter trend. I yesterday morning I recommended XOM as a short, and it pulled in sooner than I thought, but it kept pulling in. It would have been a great short. I did not capture that. I did try VLO as a counter trend trade, and it went against me, so I just stopped out.
Yep. Yeah, that was right after the open, that VLO trade, because we were talking about oil going up, and then I see, Kimmy just shorted VLO. Okay.
Yeah. But XOM was the winner. That was the one I should have shorted. That was what I had in my morning note.
All right. So yesterday you bought MicroStrategy, sold that at a profit, bought NVIDIA, sold that at a profit, bought TLT. Wow. Sold that at a profit, bought and sold Meta at a profit, and Google was break even, but it went after you.
It did go. The people in the room were like, thanks, Kimmy. It went after you got out. I got frustrated. When I get frustrated, I'm like, And sometimes when I get frustrated, I come back in, but I didn't come back into that one.
And then what are you watching this morning?
Names are gapping up, right? So I'm looking at FedEx, but it's already gapping up high. you know, I'm going to have to see what goes on with everything with the gap up, see if they pull in down to the previous day's high, you know, just to see. Oh, sorry.
It's okay. It's okay. It's the internet, Kimmy. It's the Kimmy. It's the internet. Who cares?
Right. No, sorry. We have someone working in the house.
It's okay. It's okay.
Hey,
maybe you can help him with his trading. All right. How about that?
exactly.
Yeah. All right.
You know, I'm trying to see maybe Johnson & Johnson pretty beaten down. I'm looking in there. So I'm going to watch FedEx. I'm going to watch XOM again. It's Friday. Don't love trading Fridays.
And end of the month.
End of the month. And listen, you know, Thursday, Friday, maybe they want to keep it bullish. You know, yesterday it did pull in, but it remained, you know.
Actually, it is not just the end of the month. I just realized.
It's end of the quarter.
End of the quarter. Window dressing. Hell.
Window dressing. So they're definitely, I would think, unless they decide to sell, I would think they'd want to keep the market up. But, you know, we'll see. We'll see how they hang on to this like 431, 432 area. If it continues next week, we could have a push up to 434 to 437. So we'll see.
All right, if you want to get Kimmy's trades in real time as she's making them, go to her trading room. The link is in the description. Kimmy, have a good end of the quarter.
Thank you. Bye, guys.
Talk to you next week. Yeah, I didn't realize until just now. Wow, it is the end of Q3. Time flies when you're having fun. Hey, earlier I mentioned.
Welcome to Spencer Learns the Calendar. This is a new Friday segment.
I know. End of the fiscal calendar as well for the federal government, I believe. I think their calendar, their year ends today. Hey, earlier I mentioned Carnival. They reported earnings like 8 minutes ago at 9:15. So EPS beat, sales beat. Don't know what the stock is doing. Let's take a look. Oh wow, that is a hell of a candle. Okay, we'll wait till the open, see how that shakes out, because it's wild there. Okay, and then what else do they say? Occupancy rate. I don't care about any of that stuff. Okay, anyway, Carnival's out. It's trading. It's moving. It was up, now it's down. So there's that. Okay, well, what else is on your mind today, Steve? Anything?
We need to redo our international ETF deep dive, where we dissect these ETFs by exposure, value versus growth sectors. You ever read that? You don't read our stuff?
I do read your stuff.
We did this paper. Gosh, I don't even know when it is now. I'm talking to the guys in the research chat right now. I think it was 2021, where we dug into.
I probably didn't read that.
50 different of the country ETFs and the diversified ETFs, right? And then we broke down the exposure between value and growth, and then even more specifically through like natural resource and commodity stuff, right? And then tech stuff. Because I think exactly like Meb is saying, if we're going to finally get this trend reversal after 10, 15 years of US over world, growth over value, then you do want to be invested outside the US in the most commodity heavy, natural resource heavy countries. So we got to go find out what they are, because they change over time. During the last commodity boom, it was like, go to China, right? China's got all the commodity exposure. Emerging markets in China are all tech and growth now, right? Like, it's completely changed.
Yeah.
You have to stay up on these exposures and the sector breakdowns in these countries to determine who's going to win if we do get this, factor reversal in favor of value.
I was wondering if Meb was going to, address, the fact that things that are cheap are often cheap for a reason. So I'm glad he did, right? Because when you just talk about something being expensive or something being cheap, it's kind of only half. It's only half the story. And his point about buying all-time highs being a great idea. I have not read that, but I've seen other research done by other people that, as a fun exercise. I think Ben Carlson did this at Ritholtz. It was like, what if you bought the Roaring 20s high the day before the Great Depression? What if you bought the .com highs, and what if you bought the 07 highs, and you still would have done okay if you held on long enough, right? So I think having not read Meb's paper, I'm assuming that's the takeaway as well. But yeah,
we know this as technicians. We do know this. But I'm interested in his findings anyway.
Yep.
But yeah, these are all facts. JC would say that this is facts. You buy high and sell higher, right?
That's it.
So that's really what's on my mind. Again, I think from a tape reading perspective, tactical perspective, we really do need to close higher today. I want to see some. Well, we're 3 minutes away from the open, so I'll wait before we do the little market breakdown here. But dude, S&P futures just keep moving higher. Right now, we're up 70 bips, trading on the highs of the day. We're scooping and scoring. Let me give you a chart, Spencer, and let's talk about this. Do you want to do like a Strazza spotlight segment?
Oh yeah, we didn't do one yesterday, do we? Well, the whole show was Strazza spotlight because JC's.
You want to do like a little news first while I mark up my chart? You want to like?
I kind of did the news already. I mean, there really isn't a whole lot this morning. Oh, thank you for the reminder, Fonz. We do have a mystery chart.
Do that.
Yeah, all right.
Fonz, I thought Fonz was coming on to discuss Chart Summit highlights today. Can we do that?
Yeah, Fonz. What happened to that? Fonz yesterday he goes, "Yeah, I'll come on tomorrow."
He is.
Yeah, it's tomorrow, Fonz. It's tomorrow. He's here.
He's ready. Bring him on.
You want to turn the camera on? Hey, look at
that. That's great.
Hey, what's up, guys?
Alfonso.
How's it going?
What's up, Fonz? How are you? So
I'm good.
Alfonso, I think, published his first blog post on the website yesterday.
That's right. Yep. It was a chart of the S&P. I will show you. Sorry?
I said it's been a long time coming. You've been helping behind the scenes on these blog posts for years now, but now Fonz is going to start helping out with his own little note every morning here, right?
If you've ever seen Alf Charts on Twitter, this is the guy.
This is the man behind the scenes. Spencer calls him chart master. He's really the chart ninja.
Oh, excuse me.
The fastest charts on this side of the whatever.
Thank you for that.
Equator. Primer, I don't know, whatever.
So basically, that was the chart I bring today. I know, Steve, you already mentioned it yesterday.
I stole your thunder.
Sorry?
I stole your thunder a little bit. Walk us through it. Why is this chart important? Why did you write about it yesterday?
I mean, we have been talking about a lot of potential short-term tops. I'm seeing like a lot of pessimism, like on Twitter. Everyone is expecting to say these stops to resolve lower and like waiting for a big crash. I'm seeing a lot of charts comparing to 1987, and right now the S&P is at a logical level too for buyers and bulls to step in, and catch higher. I mean, this is like a confluence of support. We have the August highest from last year. We have an upward trend line right there. We have also the 61.8 retracement, and the 14-period RSI hasn't reached oversold. So I think this is a logical level to see this potential topping pattern to fail.
Yep.
So that's my level I'm watching right now.
And when you zoom in, it's a great chart. Shows that confluence of interest, right? The August highs are so important. Flip to the futures chart I just dropped in, guys, because I just want to show the follow through and the last 3 candles. Throw that bad boy up.
Okay.
So this is basically what the post was about, right? We have to repair this damage quickly if this is going to be a failed top. And what we could do is we could look at other sectors and indexes that have similar patterns playing out, right? Whether it's the NASDAQ or tech, and say, are they reversing? And I can tell you today they are. And the S&P 500, when you zoom in, I think it's like 4370, right? At the SPX index level, right? So 4370. It's like the pivot lows from both June and August. 4366.50 here today. You see the wide range doji from 2 days ago, a little follow through yesterday, and another surge now here this morning. How we close today is going to be huge. We reclaim that level. I'm looking for trades. I'm looking for longs. That's a tradable low. What do you think? Am I crazy? I actually think this was a great pullback, and it's probably going to bring a lot of people back into the market.
Are not these like your favorite patterns, that top patterns that fail?
You know me so well.
Yeah.
You know me too well.
And it would be crazy to see that, because like everyone is looking at this head and shoulder formation and expecting that drop. So the market tends to do, sometimes exactly the opposite at the majority think or sees, So
Yes.
I wouldn't be surprised to see, demand coming in and, do something more constructive in favoring
Well,
the bulls.
well, here's what happens, and this is why these are some of my favorite patterns, right? You trap shorts on things like this, right? It's not the failed top that I love so much about this. It's the failed top. It's the fact that it's a reversal pattern that's not following through in the context of a strong uptrend, but also it's the shake, right? You get that shakeout low, which we got earlier this week. You had Fed day last week, all these red candles, right? People are turning bearish. Everybody's talking about these tops, like you said, Alfonso, all these scary charts out there on Twitter, right? Every email I get past few weeks is talking about these ugly technical patterns. Everybody's getting short. All of a sudden, we rip higher back above these pivot lows. They have to cover, and that adds a little fuel, right, to this automatic reaction that we get. And I like it when trades work right away, right? You get green, a little P&L right off the bat. It feels good. You can add to them. So these setups, as a trader, I particularly do like. I think that's where this is headed. Sure looks that way. Now, how important are things like interest rates and the dollar right now, Fonz, to you?
Yeah, so I just bring some charts. I would like to share this chart. I mean the dollar. This is an updated chart between US dollar and the S&P. A strong dollar, it's a headwind for equities. It's that simple,
Yep.
Here is how I see the US dollar index.
Yeah.
About 105.50. I think the bias is higher.
I mean, that's a clean base, right? That's a textbook reversal pattern.
Yeah, I agree with you. So we will have to see like more follow through to confirm this reversal, or this might can change and be like a massive failed breakout. But so far I treated like of course as a base breakout, and the implications for U.S. equities are not good.
So the dollar index actually just here this morning retested those pivot highs, those year-to-date highs. Maybe that's the retest, and we go. I don't know if these, if equities are really going to hook higher here. Maybe the dollar falls back into the box. I think that would be probably the best outcome for stock market bulls.
Yeah, definitely.
Sideways dollar, right?
Listen, sideways or lower, but you don't want it ripping.
Right.
That's right.
Same with rates, and you also don't want them crashing. So it's complicated.
Yeah.
Talk to us about the bond market quick. Don't steal too much of Ian's thunder though, because I think we have Ian on next after you.
We do.
Oh, do we have Ian?
Yeah.
Yeah.
In like 10 minutes. Yeah.
Oh, okay. Yeah. I mean, yields are rising. And another chart that I found interesting is, of course, commodities versus S&P are related with crude oil. Crude oil making new 52-week highs in an environment where rates are rising. Commodities tends to outperform U.S. equities or equities in general. And I wanted to talk about this. I mean, coal. I have been telling you guys to talk about coal, in the morning show. This is our custom index, the largest 9 coal stocks making new all-time highs. I don't know if you want to take a look at some individual names within the space, but
yeah, we do. I want to know what your favorite ones are. So this is our custom index. Did you hear what Mr. Meb Faber was just saying about the old coal ETF, Spencer? Did I hear that right?
Yeah, I hear that.
Well, it confirms our theory that someone's going to launch this thing.
So Meb bought that ticker? How often?
No. That's not. He said someone else did. Oh, no, yeah. Meb bought the ticker, but there was another filing that was not from him. So
No. That was the range coal ETF. We've talked about that. We're all very excited about it. They also launched a nuclear one. We don't know what those tickers are going to be yet, though. It's brand new.
Sure. Well, yeah. Bottom line is someone somewhere, whether Meb or otherwise, is launching. There will be coal ETFs. Don't worry. They're coming.
You know, I kind of like this idea in the chat. I feel like Ian should just be in here with us. I don't know. The people want it, Spencer. The people want Ian to just join. We're just going to have a party here. Analyst team hangout. Let's go.
Yeah, let's do it.
Tell Ian to get ready.
Yeah, we can do that.
All right, talk about your favorite coal names because there's so many, right? Like we had CEIX, AMR, they left the station first. I know I've been dropping BTU charts, which has been the laggard, but like the worst ones are playing catch up. Yeah, look at this. So good.
I mean, look at Consol Energy. I mean, making new all-time highs. Here's AMR making new all-time highs, very similar to Consol Energy.
Those are by far the two strongest, I would say.
Yeah, by far. Look at Warrior Met Coal,
10%.
It broke out recently, like 2-3 weeks ago, from a nice base. It's making new all-time highs as well. It's reaching the 161 extension. I think maybe you can define risk at this level, or wait for like a pullback towards 43. But I like this one. An arch, I really like this one above 153.
Gosh. This is just making me more and more upset that there's no longer an ETF, because whenever there's a situation where I know nothing fundamentally, it's not in my nature to want to pick the winner. I'd rather just buy them all.
There's not much to. Here's the problem with that, right? I used to be the same way. Oh, I don't understand the company. I don't understand. We're not smart enough. You're not supposed to understand 150 different industry groups because they all have different economics.
Yeah, I'm not going to understand it. Yeah,
it's not your job. The chart looks good. They do things with coal. People need more coal. It's a bull market. Commodities rock. Just buy the best looking ones. What's wrong with that?
And the reason I brought these charts today is because they are working. Yeah. These is an area that is working and have been working even in a weak equity market in the last 2 months.
It's true.
Absolutely. So ARLP, I was looking at yesterday. This is how much I like coal right now. I hate K1s, right? So I don't buy these LPs. They're just not for me. Yeah, nobody wants it. It's a nightmare from tax reporting purposes. I know. This company pays a 12.5% yield. And I know I'm up here all the time talking about how these are dividend traps, these big yields. They're going to be able to service it, from what I understand, right? Looked into the company a little bit. They'll be able to service it and keep hiking it, frankly, I think, from what I'm seeing. The chart looks great. This is the one that had that huge win streak. I don't know if we have the win streak chart. It's up like 15 straight days earlier this month. And then it had one down day earlier this week and then ripped like 3 or 4% yesterday. So anyway, 12.5% yield. And as somebody who hates K1s would never do this, I'm like over here looking into it. Am I crazy? Is it worth it? Do I chase the double-digit dividend?
What, AMLP?
ARLP.
ARLP, right. AMLP is a different one.
I feel like such a hypocrite. But I mean,
look, you'll hate yourself for it in April or March, whenever the hell you do your taxes. But sure.
I don't know. Thinking about it, I haven't pulled the trigger yet. I do own some coal. I own plenty of coal. But this one, maybe you tuck it away, put it in a retirement account or something, right? No taxes. What do you think? I don't know. I'm again, more questions than answers about these LPs.
All right, we have Ian Culley here. Should we bring Ian on? I think we should. Let's
get Ian involved.
Let's get Ian.
I'm gonna go heat up my coffee. Ian's got to come on here and talk to me about these energy stocks.
All right, he's got the charts. I can tell you that.
Yeah, I know he does.
Good morning, guys. What's happening?
Yeah, that's my favorite intro, no doubt.
Oh man, what a start to the morning. Wife left for Vegas last night, so I got the kids all on my own, and it's a lot to get out the door with a 2-year-old and a 5-year-old, and
Does that explain why you have the couch up against the door to keep him out?
No, this is an office. That leads down to the kitchen, actually. Believe it or not.
I like my idea better. But yeah, keep him out. All right. Ian brought some energy charts with him. Can we let's get him on the screen here a little bit?
Yeah, let's bring him up.
Let's start. Ian, where do you want to start? You want to start XLE or what?
Yeah, I mean, we can just go right down the list. Let's just check them out.
I don't know.
Yeah, XLE still range bound, but man, it's pushing up towards the upper bounds of this potential ascending triangle. Those patterns tend to have a bullish bias. And I mean, energy had a great day yesterday. Noticing a lot of the individual industry groups challenging similar shelves of former highs. Oil services, XES chart, I brought that as well. That's obviously been doing really well. But MLPs, those midstreams, and also the refiners. Refiners are also looking good. Those charts are in the deck as well.
What are you writing about for commodities?
Today, I'm actually going to write about oil and wheat and their relationship. And, months ago, I wrote a post, about crude oil and wheat, and that you really need to pay attention to wheat if you want to know the direction of crude oil.
Mm-hmm.
But upon closer inspection, I had it backwards. I had it wrong. Really need to pay attention to crude oil because it has a tendency to lead wheat at significant bottoms are roughly like 6 to 8 months.
Really?
Yes.
Yes.
Much? And I went back and I listened to the technical analysis radio episode with Connie Brown, where I got the idea in the first place, because she just kind of slips it in there at the end of the conversation. And she talks about crude oil leading, not the other way around. So I'm going to set the record straight today.
Awesome.
Share some charts and dig in, because I believe we could be carving out a significant low right now.
We're going to talk more about this on What the Fic today at 11:30 Eastern time. So
Ian came on at the chart summit. Yeah, definitely tune into What the Fic. Ian came on the chart summit, and everybody was kind of talking about this corrective action and these short-term tops and the spooky stuff. Ian's like, but there's a solution. There's a better way.
There's a better way.
You can own commodities. There's a bull market somewhere. I was like, is this just channeling like his inner Jim Cramer? But it's totally true. How do we get, what are you looking for in terms of confirmation? Like, is it just as simple as XLE completing this base? Like, how do we know the next leg is here? Because as much as energy has outperformed this year, when I look at the charts, still rangy, at least in equity markets, right? So is it as simple as XLE clears these pivot highs and then it's go time, or what are you looking at?
Well, I mean, I think if we look at a lot of individual names, there are some individual stocks that are looking great. Coal. I mean, I brought a number of charts that have broken out and
you want to throw some
catching higher. Oil services names have been doing really well. So I think instead of trading XLE, or at least if you want to trade XLE, again, you got to wait for that breakout. I think once XLE does break out, then the rest of the space is really going to get going.
Okay.
I like the ones that have already broken out.
So talk to me about some.
So again, oil services. They've definitely been leading. As long as XES is above 91 and a quarter, 91 and a half. I like it long all the way back up to 126.50. That form of polarity zone.
So unlike XLE and something like XOP, already at new highs, right? Oil services.
Yes.
Okay.
Yes, but if we look at explorers and producers, they still have some work to do. What's interesting is refiners look really good, but I also brought an updated chart of the crack spread. And this is the margin. This is breaking down below 2018 highs. This shelf of highs going all the way back to early 2018. Not the kind of action that we want to see. Crack spread if oil refiners are going to complete that basing formation.
So does this only matter for oil refiners? So that would be the ETF crack and its components, or is this like a bad sign for the broader oil and gas industry? What does this mean?
I don't know if it's a bad sign. I wouldn't say that it's a constructive sign, and it's definitely impacts those refiners far more than other areas for sure.
All right.
Not the most bullish. I mean, this gets back to us talking about, gasoline's got to get into gear, right? Gasoline really needs to catch higher. I know no one wants to hear that. Same with heating.
Yeah, it does. Yeah.
But to support higher prices in crude, it does. And it just turns out crude's, running into resistance at a logical level around 93. So
maybe that's more a cautionary thing for like the downstream operators, right? These refiners and the MLPs, but maybe less so for oil services, which are more worried about like bringing new rigs and more supply online, and the explosion producers themselves.
Right. Exactly.
All right. So how about something like natural gas? Does nat gas join the party, or are they left out? It's just like a coal, nuclear, and crude kind of thing.
Yeah, I mean, nat gas is it does its own thing, and we're heading into a very strong seasonal period for natural gas.
Yep.
But just hasn't really been able to get itself up off the mat. Doesn't mean it won't. It doesn't mean it won't. But we don't want to own it. We don't want to get long natural gas until it does.
So we were doing Chart Request Live yesterday, and someone had requested Devon Energy, DVN. And I remember Devon from 2020, 2021. It was, I think it was definitely the best performer in the S&P 500 one of those years, 21.
Really?
It was a leader, right? And I looked at the chart today, and it did not look good. It's like, hanging out around its pivot lows. Looks nothing like, the strongest energy stocks. And somebody in the chat said it's because they have all nat gas exposure. It's like, 3/4 nat gas, not oil. Okay, interesting, right? Because, rarely really look into these companies and see exactly kind of what the breakdown is, because that is the case for a lot of them. But it seems like they have become the laggards. It's not just nat gas spot lagging some like other energy futures contracts, but the nat gas stocks are kind of the laggards and the ones you want to stay away from beneath the surface.
So that could be a great play if you don't want to, just use UNG as a vehicle for natural gas.
You guys should we do our mystery chart segment that we have?
What is the mystery chart? So I don't know it, so I could just guess like an idiot.
Yeah.
You know it?
No, I don't know it.
You will know. So here is a mystery chart. Let's see what people say.
What do we got here?
Ooh.
I mean, I don't know. To me, that could be like anything. any commodity. I don't know.
God.
OJ 6 months ago.
I don't know what's going on the left-hand side of the chart. That's all the history that we have?
Yeah, that's all the history. Do you want to know
Give me
what
clues.
the chart is?
No,
give
me clues.
Yeah, we need clues.
Clues. Is it a daily, weekly, or monthly? This has got to be a weekly or monthly, right?
It is a daily chart. I think. Yep.
So is this a recent IPO?
Yeah.
Wait, is this a stock or a commodity? What is this?
Is this inverted?
It's not inverted.
Oh.
It is.
It's a new IPO.
It is an ETF.
It's an ETF. Oh, okay.
And we have been talking about energy, commodities. So what other area is like working? Not just coal, right?
Yeah. So is this NLR?
I will show you the mystery chart, okay?
Wait, chat. Hold on. Drop me.
Hold up. We got uranium. I'm back.
We got uranium in the
like it.
Everyone in the chat's in uranium.
I know it's uranium, but what? Junior uranium.
Juniors. Okay.
Wow.
Nice, Fonz. Nice.
You know what's funny about uranium is they're all down this morning. I'm trying to look to see if there's news. I don't think there is, but all the uranium stocks down.
So, Ian, did you look at that spot uranium ETF that I had sent you? Sprott, not Spot, but Sprott has all of these different fund options.
Mm-hmm.
Did you see this?
I did. I thought it was really interesting to go into just all the benefits of uranium in terms of its just use case.
Throw this chart up that I just put in the Slack. So this is actually invested in physical uranium. SRUUF.
Oh, it's a trust.
Yeah.
Okay.
So a lot of options, right? We got no options for coal. We're all sitting here desperately awaiting this new coal ETF launch. Spencer's like, I can't even buy coal without an ETF. Poor us, right? Meanwhile, we got like 10 different options of uranium and nuclear ETF. So sometimes I talk about the sentiment and how, uranium is just turning. I don't know. There's plenty of options out there. And a lot of them have been there for a long time, whether it's URA and LR, right? We got a junior uranium ETF. Is that necessary? There's like 10. There's 10 uranium companies. Listen, what's in this thing?
Yeah,
right. I know. That's
Great question. Well, here, let's look it up. What's in the junior uranium fund? Let's see.
It's kind of like, even if you, all of these ETFs, man, it's and Meb was kind of alluding to some of the problems that these fund managers have, right? Especially if you're running an ETF, you have all these different mandates. You have to be careful with liquidity, and you don't want to impact or move a market, yada, yada, yada. If you look at even like the Spider Bank ETFs, KBE, KRE, way too similar. GDX, GDXJ, a ton of overlap there. So, a lot of it is just packaging and marketing, but when you look beneath, you're like, this is kind of the same thing. I don't know. I would
notice that a lot.
I would imagine this is the same thing going on here. So this is the Sprott one. So I guess the equivalent would be the URNM, right?
Mm-hmm.
So let's compare those components and report back next week. Fonz, help me with that.
Yep, definitely.
Top holdings in URNJ, Uranium Energy UEC is 14%.
Okay.
PDN is about 13%. And NXT is about 11.5%, and those are your top 3 holdings. So
those are good ones. I like those. What else? Can you keep going?
Yeah, sure. Next Gen. No, I said that already. Energy Fuels. UUU is is
vanadium.
That's about 10%, and then we have a 5%er. That's DYL, Deep Yellow. Don't know it. I don't know any of these really.
Oh yeah. I like that.
Boss Energy, BOE, DNN.
These aren't U.S. stocks, though. Those must be Canadian. You're not.
If you look at
I
don't think there's here. Let me see.
All right. Last time we asked Spencer to look up ETF.
There's 45% of the fund is in Canada, 18's in the U.S., 31% in Australia. That's pretty much it. Oh, 1% in Spain.
I mean, Jas makes a good point here in the chat. Some of these niche ones, I think he's talking about these niche ETFs, right, have such low volume, it's hard to move out after making money. You got to look at that before you get in, right?
That's important.
I'm not being sarcastic at all. Like, it is important, right? You look at something and say, oh, wow, this is a great chart. I made the mistake on here a few weeks ago. I'm like, look at this NLR. It's great. JC's like, you can't buy this, right? I saw the price performance and saw how much stronger it looked than something like URA, who people do use as a vehicle. I'm like, oh, this is the one. You got to look under the hood and make sure, okay, is there enough volume for me to even want to be in something like this? And you're right. And even some of these small and micro cap components that Spencer, I think, was probably just naming out some of them I've never heard of, Deep Yellow and other things. You got to check the volume and the liquidity characteristics there too. What I will say, though, there are plenty of liquid options and liquid vehicles in the uranium space. There are names with liquid options markets, right? So there's all sorts of stuff. Just dive in and kind of take a look. You do have options. You got enough options to get involved responsibly.
Yep.
Some
of these funds you can check out anytime you like, but you can never leave. Okay, recess time. Let's do it. 4 minutes left.
I'm going to start off, say some nice things since we have everybody here. I just want to say how proud I am of the team and everything that we accomplished again this year with the Chart Summit. It is pretty much, I think, my favorite thing that we do each year. Took a year off last year. I missed it, but we came back big time this year. I thought it went great. And thank you guys all for all your hard work. Spencer, you killed it emceeing. Ian, you had the best presentation. Alfonso, all the work behind the scenes and everything you do to keep the businesses running while we're doing these kinds of events. So you guys rock. Very successful week.
Thanks, man. It was fun. I enjoyed it. I enjoy, just being able to spend the day listening to all the top technicians come on and just share their thoughts and where they see the market heading. Yeah, it was a blast.
So we are so lucky, right, to have a community or like a close little network where these guys are like genuinely our friends, right? And people that we talk to and we're on the phone with. So we can put these things together so quickly and have such a killer lineup. And it's awesome. Like it would be a shame if we didn't do it with all the people that we know, and the quality of information that was shared. It's awesome. So, all right, that's all I got. All
right. My recess is checking in on my arbitrage of the week. If you missed it on Monday, my Chiefs versus Jets tickets for Sunday. I thought you could buy tickets now ahead of the Swifties. Once they realize that Taylor Swift might be at the game, they might bid the prices up. So I looked at it Monday, obviously. I didn't buy it. I looked at it Tuesday again, and the prices had gone down, actually. So I did not move on it. I did not look at it Wednesday. I was too busy with Chart Summit. So by the time I looked at it Thursday again, prices had gone up. And so just to recap here, I don't remember what the prices were on Tuesday when they had gone down, but on Monday morning, when I first looked, it was $108 for upper bowl. It's now going for those same seats for $148. So that's a 37% increase in, 4 days?
But you didn't do it.
I did not do it. I was all talk, no bite, and shame on me.
Come on, man.
Because I should have done it, and who's to say they can't go up more tomorrow or even on Sunday? So
it's so funny. I heard this story on NPR a couple of days ago, and they were claiming that Taylor Swift being at the game actually pushed prices up over 40% at one point.
That's what he's saying.
Yeah, 37% in the upper bowl right now.
I'm seeing all these crazy stats. I don't know what to believe on the internet anymore, but like Travis Kelce jersey sales are through the roof. Like they're selling tickets like gangbusters out there in Kansas City. I don't get it, man.
She's an economic force to be right.
She is. She the Swiftie premium. And so shame on me for not buying these tickets. I should have bought them on Tuesday when prices had gone down, but that kind of freaked me out a little bit. So I didn't move. And
hey, it's tough to buy the dip, man. Tough to
buy. Give us your recess, guys. I want to hear from you guys. Spencer, you talk enough about these Taylor Swift tickets. All right. You didn't do it. You didn't pull the trigger. So that's it. Maybe you try next week. I don't know.
Fonz, Ian, you got anything?
I have nothing for recess.
Nothing for recess?
Not today. I mean,
you just got back home from Europe. I'm sure you're still settling in.
Come on. Yeah, you spent a month in Europe, man. You
can't say anything cool.
Well, okay. My recess is I recommend go to south of France. I went to Nice, Cannes, as a village, and it's beautiful. It's a very nice place, nice beaches. I recommend it.
Look at this guy. What a life. How do I get your life, man?
I love it.
Jeez.
I don't know.
All right, Ian, go.
I got the kids. I got my 2-year-old and my 5-year-old sons this weekend, and we're gonna party. We're gonna party. 5:00 this afternoon. I'm gonna go pick them up, and it's just we're gonna play in the pool. We're gonna go to grandma's house, hang out with uncle, and just have fun all week, and I can't wait.
Ian, I'm not sure how good your Photoshop skills are, but if they are good, you should send your wife pictures of the kids in danger. You just take a picture.
Oh, she knows.
She knows? Okay.
Oh, she knows, yeah. We have different philosophical approaches to raising the children. I believe in the just experiential knowledge. So I say no every once in a while, but I like them to experience for themselves when things don't work out. And also on the other side, to figure things out themselves.
Right.
I let the 2-year-old dress himself.
I'm thinking of Big Daddy right now. He's Adam Sandler.
Yeah, you're all right. I'm saying
Paper.
that, man.
I just throw newspaper all over the floor whenever there's a spill.
Oh, that's good. All right, that'll be a good place for us to wrap it up here. Thanks to our guest today, Meb Faber. Thanks to Kimmy. Thanks to Fonz and Ian. Thanks to Steve for stepping up in JC's absence here. He'll be back on Monday. New quarter, new month, new candles. We're excited for that. What to Fic, 11:30 a.m. Eastern time today with Ian and I. Come back for that. We'll see you there. Go make some money. Bye, guys.
Great stuff, guys. Have a good weekend, everybody.
See you guys.
Running.